Welcome to Yahoo Finance's flagship show, The Morning Brief. I'm Julie Hyman. Let's get to the three things you need to know today. First up, U.S. stock futures rebounding after selling off following weak jobs data and President Trump's tariff announcements. Investors are now increasing their bets the Federal Reserve will cut rates in September. That's after payrolls came in below estimates with major revisions to the May and June reports. Meanwhile, President Trump said he will name successors for the openings at the Federal Reserve and Bureau of Labor Statistics in the coming days. The update coming after the president fired the head of the BLS after the weak July jobs report and revisions to May and June. The opening at the Fed comes after Governor Adriana Kugler announced her resignation late on Friday ahead of her term's expiration next January. Her exit hands Trump a sooner than anticipated opportunity to appoint a governor who more closely aligns with his preference for lower interest rates. And Tesla approving a near $30 billion pay package for CEO Elon Musk. The new agreement includes 96 million shares of the automaker that will vest if Musk continues to serve in the top post for another 2 years. That's what the company said Monday in a regulatory filing. The massive payout meant to keep the billionaire's attention on the automaker as a legal fight over a 2018 pay package drags on. Let's get a check-in on stock futures after a sell-off Friday following that jobs report. We do see a little bit of relief here this morning. We've got the Nasdaq leading gains, indicating a gain of 0.8% at the open. The S&P 500 up 0.5%, and the Dow indicating a gain of about 0.4% at the opening bell. Let's dig deeper now into those top stories that we're following today. Rate cut expectations rising after the weaker than expected July jobs report and a big week of earnings on deck. Plus, the Trump administration says trade talks with China are about halfway there. Joining me now, senior reporters Brooke DePalma and Josh Schaefer. And guys, really, we saw kind of a rocking to the assumptions that the market had been holding on Friday with that weaker jobs report and those big revisions. Then on top of that, we had President Trump coming out and firing the head of the Bureau of Labor Statistics, which is responsible for those jobs numbers. We had Adriana Kugler resigning, offering Trump a sooner than expected spot to fill on the Federal Reserve. And here we are this morning, and futures are up as we see investors and traders just trying to rejigger their expectations around these pretty earth-shattering different pieces of news. Brooke, you first here. What are you hearing in terms of commentary from the street about all of this?
Julie, it was already supposed to be a busy week last week, and then that led to one of the busiest Fridays of a summer that I've seen in recent years, with all those breaking, especially in the later hours of Friday after that key weaker jobs data. And what we're now seeing is markets get optimistic about the Federal Reserve cutting interest rates in September. What we're now seeing from the key CME FedWatch data tool is that the odds of a rate cut happening in September have increased significantly after that jobs report on Friday. This now being projected about 87% likelihood that the Fed will cut rates at their September meeting. That's up from just about 63% 1 week ago, as we heard from the Federal Reserve just last Wednesday, believe it or not, that they're watching out for this key economic data to come through to really make a decision about what exactly will happen in September, and certainly that weaker jobs report now leading to this higher likelihood.
At the same time, Josh, there was a little bit of consternation over the jobs report, although I saw some Ed Yardeni commentary this morning that it wasn't that bad. He thinks it's more a job supply issue than a demand issue. We do, however, have a fair bit of commentary as well from economists worried about the firing of the BLS and the signal that sends. Again, all of that said, if rates are getting cut, maybe it doesn't matter.
Yeah, Julie, I mean, to your point on that jobs report, I think it's important to point out that we've been talking about slowing in the labor market for months now, right? Yes, the unemployment rate hasn't been moving aggressively higher, and layoffs haven't been rampant as referred to by initial jobless claims or some sort of data point like that. But when you look at private payrolls over the last couple of months, we've been talking about slowing, right? When you look, in theory, I think I saw several economists essentially saying that in theory, the initial jobs report numbers from May and June didn't really square with the rest of the economic data that we had seen. So when you look at the revisions, it sort of makes sense. And the story of the U.S. economy slowly coming and cooling down a little bit headed into the second half of the year isn't necessarily a new one. So I think that's why you're seeing equity strategists sort of taking this in stride for now, saying, yes, all of those things that you mentioned at the top as we were just discussing, all of this movement might create some chop in the equity market throughout August. That is pretty typical anyway. But overall, when you sort of zoom out, the story isn't that different. Stuart Kaiser over at Citi pointed out that until layoffs start picking up and this slowing in the labor market starts to look different than low hire, low fire, he's still positive on equities. If you're starting to talk about a real labor market downturn, that's a different story and one we need more data to sort of start to really form.
Yeah, it seems like one of the things that folks agree upon right now is that there is volatility coming in August, to your point, a seasonally kind of choppy time. And Josh, you know, the other thing is that we're still in the midst of earnings season, and that seems to be a thing that is giving a lot of strategists optimism.
Earnings are going well, Julie. And you know what? At the end of the day, that's one of the key things that matters, right? If we're going to talk about the stock market, you care about corporate profits. I thought FactSet had a really interesting chart in their weekly research report looking at Q3 earnings estimates. Typically, those would fall in the first month of the third quarter. That would be the earnings we're going to talk about in a couple months. They're actually up slightly. So earnings estimates are holding up. They've been holding up throughout the end of the next year. So that makes someone like Mike Wilson over at Morgan Stanley say they're a buyer of dips. He's thinking out over a 12-month period. Maybe, yes, you do get some chop. Maybe there's more weakness in economic data, and that weighs on stocks over the next couple weeks. But when you think about the long-term trajectory right now of the S&P 500, what you're seeing is confidence in the profit outlook going forward, and that's a positive. The team over at Barclays also pointing out where that strength has been. Well, it's been in AI and tech, right? And so what works amid a lot of volatility, or what has worked in this bull market amid a lot of volatility, amid questions about interest rates, has been large cap tech, right? And so if you can stay there, perhaps hide out there in an area where profits continue to accelerate, that's one thing they're sort of recommending this morning as you look through kind of the chop that we're expecting.
So you got all of that big tech. Brooke, as always, you're focused on consumer earnings in particular, both what we have heard and what we're going to hear. So what have we heard and what are you looking for?
Yeah, certainly. We've heard from companies like Coca-Cola, PepsiCo, P&G, Whirlpool, and others that there's this pressure around the consumer and they're seeking out value in every way they can. And that continued just this morning with what we saw from Tyson Foods. They raised their operating outlook based upon strong demand for chicken. That's a cheaper protein. And so we're seeing consumers turn to there. In addition to that, it's important to note here that that really offset what we saw with that shorter supply of beef, as well as that drove up prices. I think something like up 10% when it comes to beef prices for the quarter for Tyson Foods. But certainly when we hear from not only Tyson Foods on the call this morning, but also McDonald's on Wednesday morning, there's this notion that we're going to see that innovation continues to be a driver for the consumer to spend, but also they continue to seek out value. And we're hearing some call outs of the low income consumer remaining under pressure. I'm sure we'll hear the same from McDonald's on Wednesday.
And then also we heard from Berkshire Hathaway, of course, you guys. Brooke, again, to tie it back to something you cover, Kraft Heinz, there was a write-down related to that company.
Yeah, there certainly was the write-down around Kraft Heinz. We did see Berkshire Hathaway of a $3.8 billion write-down of its 27% stake in Kraft Heinz. Of course, around Kraft Heinz, there's that potential of the company splitting into two, its condiments, and then it's more of its innovation packaged food sides. And so it'll be interesting to see how exactly that moves forward, given Berkshire Hathaway's major stake, or, minority stake rather, in the company. Certainly what we've seen over the past year is Kraft Heinz, suffer in terms of their stock price. It's moved lower. It's down now about 23% on the year. And so that'll be one to watch, especially since Berkshire Hathaway pointed out over the weekend.
Brooke, Josh, thanks a lot. Appreciate it. Well, President Trump says he will announce a new Fed governor as well as a new head of the Bureau of Labor Statistics in the next few days. This after two massive exits on Friday. First, Trump's firing of Bureau of Labor Statistics the chief after data showed weak jobs growth. He called the report, quote, rigged. And two, Fed Governor Adriana Kugler stepping down from her seat at the FOMC wasn't due to expire until January. Yahoo Finance Fed correspondent Jennifer Schonberger has more. I know those changes are coming to the Fed. And by the way, Jen, the president just out with a post on social media saying he's going to pick an exceptional replacement at the head of the BLS. But let's talk about the Federal Reserve first.
Yes, sure, Julie. So President Trump, as you said, set to name a replacement this week for Federal Reserve Governor Adriana Kugler, whose unexpected resignation slated for this Friday opens an opportunity for the president to put in place a successor to Fed Chair Jay Powell, whose term ends in May 2026. The president told reporters last night that, quote, "I have a couple of people in mind. I'll be announcing that probably over the next couple of days." Kugler's term as Fed governor was not set to expire until January 31st. She's headed to Georgetown University as a professor. Kevin Warsh, a former Fed governor, and Kevin Hassett, the current chair of the President's Council of Economic Advisors, are thought to be at the top of the list as potential successors there. Warsh has suggested that the Fed could look through increases in inflation from tariffs because it would be a one-time increase in prices, while Hassett hasn't beaten around the bush, blatantly saying there's no reason why the Fed shouldn't be cutting rates now. Of course, Trump is going to be closely watching whoever he appoints to see how they perform and whether they could be the successor for Fed Chair Jay Powell. We've already seen Federal Reserve Governors Mickey Bowman and Chris Waller sort of jockeying for that position as they dissented at last week's policy meeting, preferring to cut rates by 25 basis points instead of holding steady. And whoever the president appoints, there is a committee, right? So whoever the Fed chair is going to have to contend with the rest of the Federal Open Market Committee, who sets interest rates. Of course, if the job market continues to weaken, it may not be a question mark anymore, and we may see the need to actually cut rates. Julie?
And of course, the other big vacancy is President Trump firing the head of the Bureau of Labor Statistics. And, you know, as I just mentioned, he said this morning he is going to appoint a replacement here, but effectively, he didn't like the data, and so he got rid of this person.
Yeah, so I think there's a lot of concern now about whether the new replacement could make changes to the data process, right? That would make the gold standard, which is the government BLS data, it's known as the gold standard, sort of a question mark. And of course, the Federal Reserve and so many rely on this data to make policy decisions, to make interest rate decisions that affect Americans across the economy. We'll see what he does, but I do have to underscore that that particular position really doesn't have a hand in how the data is picked. That person really just sees the data at the end of the process, I think maybe not even until right before the report comes out. So putting a new person in place may not necessarily make a difference. And I think that's an important point to underscore. The other point is that if we're going to look to private sector data as an alternative to the Bureau of Labor Statistics, it's not going to cut it, because those data inherently also depend on government data. And it's really the government data that the Federal Reserve are focused on. So it'll be interesting to see how this plays out, to see whether there are actual inherent changes to how the data is collected and how that is reported. So I'm paying more attention to the process as opposed to who he's putting in place, because that may not make a difference.
Interesting. Jen, thank you so much. A really interesting perspective here. And stay tuned for further coverage of Trump's appointing of a new Bureau of Labor Statistics head, including an interview with William Beach, former commissioner of labor statistics. That's coming up this afternoon on Yahoo Finance. But coming up next, we're going to count down to the opening bell on Wall Street. Don't go anywhere. You're watching Morning Brief on Yahoo Finance. Now time for some of today's trending tickers. We are watching Tesla, Harley-Davidson, and Boeing. First up, Tesla has granted CEO Elon Musk an additional 96 million shares. They're valued at around $29 billion. The award will boost Musk's voting power and comes amid an ongoing court battle over his original pay deal. Back in 2024, a Delaware court ruled that the approval process for Musk's 2018 pay package was unfair to shareholders. That package was valued at over $50 billion. Musk has since filed an appeal. In a regulatory filing, a Tesla committee acknowledged Musk's extensive and wide-ranging demands, adding that they're confident that the awarded shares will be an incentive for Musk to stay at Tesla. Of course, something to point out is what Tesla shares have done this year, which has fallen 25%. Next up, Harley-Davidson has appointed the CEO of Topgolf International as its next chief executive officer. Arthur Starrs has been CEO of sports entertainment company Topgolf International since 2021. He'll step into his new role on October 1st. And before Topgolf, Starrs was the CEO of Pizza Hut. Harley-Davidson's current CEO has been in the role since 2020 and recently survived a shareholder push to oust him from the board. Back in April, the company announced that he did plan to step down this year. And finally, more than 3,000 Boeing workers are on strike after rejecting the company's most recent offer. The strike encompasses 3 facilities in Missouri and Illinois that manufacture advanced aircraft and weapons systems. The strike comes less than a year after a separate 7-week-long work stoppage that shut down production of most Boeing passenger planes. You can scan the QR code below to track the best and worst performing stocks with Yahoo Finance's trending tickers page. Well, President Trump fired a top Labor Department official in response to a weak July jobs report that he claimed was rigged. Traders, meanwhile, boosted their rate cut bets. Weak July payroll numbers and steep revisions to the prior 2 months suggested the labor market is far weaker than previously believed. Joining me now, David Miller, Catalyst Fund's co-founder, chief investment officer, and senior portfolio manager, to talk more about all of this. David, it's good to see you.
Great to be here.
So, it's an interesting day because Friday, it felt like that many market participants' assumptions about the backdrop were sort of rocked. Then you had President Trump saying, I didn't like the numbers, the BLS chief is out. Now we're up this morning. Like, how are you wrapping your head around the events of the past few days?
Sure. Well, objectively, the number did not meet expectations. People were expecting much better than 73,000. But when you look at the bigger picture, it was a pretty big reaction that we saw on Friday, given that we still have only about 4.2% unemployment, which I think by most measures would be considered full employment. If you go much lower than that, you're really going to have inflationary pressure on wages. So I think it was a bit of an overreaction on Friday, and I think we're still in a very good picture today, which is, I think, why you're seeing a little bit of a bounce back to that very strong response Friday.
Do you think that this does mean that the Fed is going to cut rates sooner than the market anticipated?
That's unclear. I mean, I think the Fed still wants to be in this space where they're cutting 1 to 2 times. I think this would give them the justification, given the number on Friday, if that's what they were intending to do anyway. Although, you look at the GDP growth numbers, 3% GDP growth, there were good reasons to say, hey, we don't really need to be cutting rates when we're growing like that. So I think they have the justification now if they want to do it.
With what has happened at the BLS, is there a concern as an investor, whoever this replacement might be? Obviously, the market trades a lot on these numbers, whether it is labor, whether it's GDP, whether it's anything else that we get from government statistical agencies. Can you still trust those numbers, depending on who gets put in that role?
I don't think it should affect your trust in the numbers. I think the numbers are still going to be printed in the same way that they were. The reaction to those numbers in terms of how the Fed will actually go ahead with policy, I think that is likely to change. I think whoever comes in there at Trump's direction is much more likely to want to cut rates to be able to show that he's putting up good GDP growth, the stock market's doing well.
So in a way, the numbers matter less going forward anyway, if you have a Fed that is friendly to Trump's agenda.
Exactly. I don't think it'll change the veracity of the numbers. I just think they're going to go ahead with Trump's policy regardless of what those numbers are.
Interesting. So what does all of this mean for stocks and for how one should be investing in this market?
So I think when you look at Friday's number, it wasn't nearly as impactful as everything else, meaning everything else, the 3% GDP growth number, the big beautiful bill, they clearly shifted direction from a Doge plan of cutting government to expanding deficits and spending more money to push the economy along. So whether or not that's the right decision for the government overall or whether we can afford that debt is a bit of a different question. It's clearly good for the stock market.
So do you think then we're we haven't really talked about tariffs yet. I should ask about that. Is that a curb, though, on the flip side? We are hearing a lot of companies talking about the effect of tariffs.
Sure. Well, when you look at tariffs, clearly with India, with China, with Brazil, he's still pursuing an aggressive policy of high tariffs. But there's also been a lot of great trade deals that have been done where companies have committed to trillions in investment in the U.S., and more reciprocity in trade where countries had not had that reciprocity before. So I think on net, where we're heading with tariffs is still net positive for both the economy and the stock market.
Okay, so all this means growthiness for the foreseeable future that growth stocks obviously have been the big winners here? Is that what we continue that regime?
I think more likely than not is more of the same over the next year to 2 years. Foreseeable future is certainly a much different question, but I guess if you define foreseeable as 1 to 2 years,
yeah, exactly.
More of the same type of growth.
And so what kind of stocks are you sort of pivoting to or looking to right now?
So I still like names like Robinhood that have been putting up huge earnings growth, companies like MasterCard that's been a real stalwart, firms like Meta that have been doing a great job in using AI to make their ads have higher CPMs, more profitability. So those types of companies that are really dominating in terms of earnings growth.
Do you have any concern when it comes to a company like Meta about its spending, especially its spending relative to revenue compared with what the other AI-focused companies are spending relative to their revenue? In other words, its ratio is a lot higher.
It's certainly a lot higher, but when you look at the net margins that Meta's putting up, it's also a lot higher. So frankly, they need to win this AI game more than almost anyone else, and they realize that they were not winning, so they're putting everything that they can now, enormous hiring packages into making sure that they don't come out in a situation where they're not dominant in AI. So I think the investments are big, but they can certainly afford it.
David, thanks for coming in. Good to see you.
Oh, thank you.
Coming up on Yahoo Finance Opening Bid, our executive editor, Brian Sozzi, joining us now. Soz, what's coming up on the show?
We're going to dive into this Elon Musk, and hi, Julie, of course, on this Monday morning. Dive into this Elon Musk Tesla big pay package. Just a lot of stock options getting out there to Elon. Interview of the morning in our Power Player segment. We're going to talk to former Commerce Secretary Wilbur Ross, get his thoughts on all things BLS and the trade outlook. I mean, Julie, you believe the data, right?
Which data?
All of it, Julie. All of it.
Sure, for now.
Great.
All right, thanks. That does it for Morning Brief. Much more ahead on Yahoo Finance.